So now that we've covered all the different ratios regarding the company itself and how it's behaving in comparison to the industry, I'd like to go over to a general concept of where is the company going qualitatively and what are their strengths, weaknesses, and later my partner will go through the opportunities and threats that they face currently in a short to medium term. Um, the strengths of Norwegian Cruise Line is first their fleet size. Even though they're not the largest, they're the third largest in the world. That allows them to tap into different markets at the same time. Um, this brings us to our next strength, which is product differentiation. While having a large fleet uh, allows you to go to different markets and then different type of demographics. Different boats are used for different types of people, for different levels of income and discretionary spending. Um, so you could have boats that are fully targeted towards the um, older age of the population than you have for the families and that you would have for younger college students, to say an example. Um, the other very strong, um, the other strength about the company, and this one is mostly regarding to its financial analysis, is the earnings that it's been generating for the past year. Norwegian has a better earnings per share than the industry itself, and from a financial point of view, it's a lot more enticing to go into a company that has very similar operating ratios and liquidity ratios and market ratios, but has this distinctive that they have better earnings per share. So as an investor, if you have X amount of money, you would make more money here than elsewhere. Following this, I'd like to go over the weaknesses. The weaknesses, it's one of the weaknesses. It's their smaller fleet, same as it was a strength. It's also a weakness in comparison to their competitors. Having less boats will uh, disable you to compete at some markets. So um, I still consider this as an advantage because it allows you to make analysis of what type of niche does the corporation want to tap in instead of just tapping all the different markets they have, like their larger competitors, Royal Caribbean or Carnival. The other weaknesses is the low liquidity ratio. This is something that is recurrent within the industry. Um, Cash flows are not very generous, to say the least. Low liquidity ratios below 0.5%, 0.5 um, indicate that most of the investments of cash are held up for a long period of time. These are immense boats that are, uh, $500 million, and they don't generate as much cash flow in order to recover this. The other weakness that we recognized was the excessive exposure to debt leverage. The company is almost three times as more leverage debt than equity wise. This is okay in a very cheap debt world that we are right now, where interest rates are low, so it's a lot smarter to be exposed to debt than to have shareholders that um, might be more costly. But still, I believe that we could come to an agreement on or come to a middle point of what is the correct ratio between equity and debt, not four times as much as we're currently at. Following will be the opportunities and threats that Loe, my partner, will explain following. Thank you.
Thanks, Sam. I'm going to go ahead and dive right in. I'm going to talk about the opportunities. The opportunities for Norwegian Cruise Line looks tremendous. They're the third largest when it comes to Royal Caribbean and Carnival, but they've been looking at just finding unique ways to distinguish themselves. In 2014, they've added Prestige, which is a top-of-the-line luxury brand. That's just been playing out amazing for them. They've added about 40,000 berths since, and that's just top for the cruise industry. Now, they're also looking at unique and differentiating ways to stand out in the market. They're looking at baby boomers. They found ways to just cater to them. The percentage of baby boomers is just booming right now, and they're capturing that market. These baby boomers, oh by the way, want to take their family with them. They found ways to package these cruises so it can cater for both parties. They've also looked at ways to come up with a line called freestyle cruising. And that's just amazing. It's able to cater to the younger crowd, the older crowd, and everybody in between. Now, market presence for them also looks very nice. They've been also looking at new ways to just open up new ports and new markets. They were in the Asia market 15 years ago, and now they're returning, but they're also looking at newer destinations. They're just building relationships and making those relationships stronger. So now there are new itineraries for these cruisers. You know, they're just gonna have better experiences and newer experiences. These are just amazing opportunities for them. They're younger, they're finding new ways to jump in. So now let's talk about the threats. What are the threats? I mean, competition is fierce. Like I said, Carnival's at the top of the food chain with about 100 ships, and Royal Caribbean about 40, and Norwegian's about 24. You can see, you know, they're a lot smaller, you know, but still, competition is fierce for them. Price increases. As far as price increases goes, I mean, economic changes always happen in market volatility when it comes to price changes. And really what's going to happen, it's going to be harder for Norwegian to adjust to these prices because they're offering a higher brand. So their margin is going to be a lot harder to meet. As opposed to, for example, Carnival, they've been offering a lot cheaper to build their reputation and doing all things of these matters. So Norwegian needs to look at these different ways and look at the future to see how they can adjust to price changes. Otherwise, it's going to come and bite them. And now I'm going to go ahead and pass it over to Carolina, and she's going to talk about the conclusion. Thank you.
We would like to present to you what our group has concluded based on our findings. In 2016, we saw growth in many areas, including their net income, profit margin, and their earnings per share. Norwegian has improved their earnings per share by 37.6% in Q3 in comparison to their Q3 earnings in 2015. The gross profit margin for Norwegian is 47.15%, and our group believes that this is strong and has grown considerably when comparing the gross profit margin in the previous year during the same quarter. Their net income has also exceeded that of the S&P 500 increase. Additionally, their net sales has increased from 1,284 million in 2015 to 1,484 million in 2016, both measured at Q3. Our group has come to the conclusion that we would not invest over $1 million of our own money into this publicly traded stock. Norwegian, the stock price of Norwegian is offered at a discount in comparison to its competitors, but we feel that $1 million into this one company is just too risky. It's safer to invest our money amongst different companies in multiple sectors to distribute the wealth and ultimately reduce the risk. Their quick ratio shows a lack of ability to cover short-term cash needs, and when competing against cruise industry giants such as Carnival and Royal Caribbean, they might need cash fast at some point. Norwegian's liquidity has decreased from the same period last year, which is a contributing factor as to why our group would not invest in this company's debt bonds. Their debt has increased since last year, and we don't believe it would be a sound investment. Norwegian's strengths outweigh the weaknesses that this company encompasses. Despite their high debt and their weak liquidity, the company has managed to grow both sales and net income at a faster pace than their competitors. Nonetheless, their liquidity ratios are lower than the industry average, and they have increasing debt obligations, and for this, we would not grant them $1 million credit overnight. especially since we are unsure of where these funds would be allocated to. We hope our presentation has better equipped you to make sound investing decisions when it comes to Norwegian Cruise Line Holdings. Happy investing!